So I received a couple questions about my strategy, the 15-minute open range breakout, and how I apply it to my trading. And I'm going to go over that in today's video. The very key thing I want to stress is that there's no wrong strategy. Whatever strategy you choose, be it the 15-minute open range breakout, support and resistance, supply and demand, ICT concepts to strat. There's no wrong way to trade. You just got to find what works for you and apply it. Another very key thing is whatever you choose, whatever strategy you choose, stick with it. Give it some time to develop, grow in the strategy, and really get to understand it before you switch. Because if you go from strategy to strategy to strategy to strategy to strategy because it's not working for you, none of them are going to work because you're not putting enough time and effort in the understanding and the application of said strategy. So the 15-minute open range breakout, it works for me. I primarily trade SPY, QQQ. I watch Tesla, but I ain't in Tesla. It works for ES, that's the S&P 500 futures. It works for NQ, uh, SPX as well. So those indexes, I find the 15-minute open range breakout works the best. And in today's video, I'm going to get into it. So here we go. For today's example, we'll be using SPY. I'm on the 5-minute chart, and the example I will be using will be Wednesday, September 24th, 2025. First thing I want to do is identify my levels. SPY was sitting at all-time highs and then began to sell off the day prior. So this is Tuesday. You got a lot of aggressive selling. Most of the times when price gets to all-time highs, that's when people will start to collect. So you'll see sell-offs such as these. With this, you mark your levels. So you'll go all-time highs, you'll mark that. You'll go green for all-time highs, right? And any level below it, and this is how I determine my level. Before we do anything, we got to know where price was chilling. We got to know where price was blowing past. These help like navigate your trading. So if price is in an uptrend and it's coming up to levels that price previously visited before, it's a good indicator that price may stop there, pause there for a second before its next move. So on the hourly chart, how I do it is I always look to my left. So wherever price was previously, price touched a couple times, I mark that as a level. Always mark to the upside and to the downside of any given trading day. Also, with learning your ETFs, SPY, QQQ, you got to know how they move. So SPY, for example, on a given day, SPY will move $3 to $5 on average. QQQ will move $4 to $6, be it to the upside or to the downside every day. You learn these by studying the stocks over and over again to learn their habits. Then once you learn their habits, you can pretty much gauge where price is going to go on any given day, depending on the trend, depending on the news. It'll let you know the direction, the guidance that it's going. So, for example, right under pre-market high, price bounced a lot in this area. If you notice the touches, we got one touch, two touch, three touch, four touch. So this is a good area to put a line there. Always look to your left to see where price was. Below that, we'll go here, for example. Price touched here, price touched here, and along here. And again, these are all-time highs. So the level's been visited a few times. It's safe to say that this would be a level of resistance because price is below it. Once price gets above it, it becomes support. So the trick to support and resistance is when price is below it and it's bouncing, take this level. This level we just drew out, let's drag it along. This level right here. When price was coming up, bang, that's resistance. It resisted going higher. So you hit that, you come back down, get some more juice, you hit, bang, you come down again. Then you break through. You broke through. So now this is support, potentially. Price is coming here. We hit this line, all-time high. We come down. We come to this area. We come down again. Hit this area, start to come down again. We get back to this line. If you see right here on the hourly, price hit and came back up. It broke through, but this line still serves as support and resistance. So this is a level of interest. When we get to right here, pre-market high, you want to mark out pre-market high. I use a different color stripe for different color things because I don't want it all to be look the same and jumbled up. Now, when I go to the 5-minute chart, what I'm going to do is get a better picture of where price actually is. This is just for a rough estimate. So I'll mark out my pre-market high and my pre-market low. I think this is a misprint, but I'm gonna go with it anyway. Pre-market high, pre-market low. Expand this so it's not super hard to see. And we have levels in between. So we'll have a level here just to keep an eye on. And below this level, price touched here, 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 here. Okay. So this looks to me like a line of support because price is above it. Support and resistance. When price is above it, it's support. Price will come and bounce. Below is resistance, meaning price will resist once you get to that point. It's more than likely to bounce off. So we're gonna color these red because it's below. Our next level, and I'll draw this line out so that you understand what I'm saying. So that line is right here. This whole line. Price came and touched, price came and touched, touch, 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 breakthrough, touch, touch. So this is a level that I'm watching. Below that, got this level. You go all the way back here, to this level, you'll see that price came and touched it several times. So you will draw another line for resistance there. And my last one for the day will probably be down here. I'm drawing these lines back here so that you understand to find your levels of support and resistance, you have to look to your left. The history is going to tell you everything that you need to know. So if price came back here and touched in these days prior, and this day, so on and so forth, you can mark this down as a key level of interest of support or resistance for your trade. And again, it gives you an idea of where price may go. If we continue to the downside, it'll probably hit these levels. If we continue to the upside, it'll interact with these levels. So you got to keep all that in mind when you're trading. So off the 1 hour chart, I'm going to jump down to the 5-minute chart. Yeah, this is a misprint. So what I'm going to do is I'm going to move pre-market high, pre-market low to here. Because when you expand it again, you get a better idea of where price was on the hourly. It don't really show you that. It shows you like the rough estimate of where price was. So I got my pre-market high, my pre-market low. I'm going to put a resistance level here as well. All right, so we got our pre-market high, our pre-market low, and our resistance levels drawn out. Now what we do is wait for the market to open, for the 15-minute open range breakout to develop, and follow the trend. All right, so we got market open. Damn, got market open. We got we got two big candles, bearish to the downside, with a lot of volume behind it. We're gonna go over volume on another video. So bang, now we are on the 5-minute chart, the 15-minute open range breakout. What that means is every candle represents 5 minutes of buying and selling. This candle right here, 5 minutes of buying and selling. This candle right here, 5 minutes of buying and selling. This candle right here, 5 minutes of buying and selling. So what we do with the 15-minute open range breakout is first 15 minutes of market open, 9 to 9:05, 9:05 to 9:10, 9:10 to 9:15. You mark out the top, Change this. The top and the bottom of the first 15 minutes of price action. And this is your opening range from here to here. That's your 15-minute opening range. So we got that set after the first 15 minutes of market open. So now we wait. It looks bearish. So it looks like price is going to continue down. If we get a break, a legit retest and reject of this level, the trend is going to go down. You ride the trend down to your lines, your red lines of prior support and resistance. Big red candle down. I got mixed up on this the other day too. I got impatient and got in early. So you get a big red candle down. The sentiment should be bearish. If it's showing you this, the sentiment should be bearish. However, we didn't get this retest yet. I'd wait for price to come back up and retest this level before continuing down. What you don't want to do is you don't want to get in here and think you're gonna miss the move, and I'm guilty of this. You don't want to get in here and think you're about to miss the move and then price reverse on you and then your puts get cooked. You don't want that to happen to you. So you gotta be patient. We gotta be patient. Shit, I gotta be patient too. Price is working its way back up. We get a test. We get a reject. I got in here. I remember doing this trade review. I got in here. Because of this long tail at the bottom, I shouldn't have done it. But I remember doing it like just on some impatient shit. One of my weaknesses I gotta work on. And price came back up. It's chopping. More chop. More chop. 0 day expirations getting cooked. More chop. We just stuck in this range right now. Boom. We got a candle with more volume than the prior candles. We had a retest of the 15-minute low and a reject of the 15-minute low. It closed below the 15-minute. So now what I'm thinking is what I should have done was got in at the close of this candle with the high of this candle, the high wick of this candle being my stop loss. It would have been great, but I didn't do that. I got in here, got all mixed up, just being impatient. Got to learn from my mistakes. Following candle, we get a big red candle, another retest and reject, and a big body red candle going down. This could be the move we're looking for. What I do is, for the sake of this video, I did not do this in real life. I'll start my short position. Start my short position here, and I'll target lower day because this is where price came to. So my target to be lower day. And this is me doing it the right way after a review. So now you got price moving, moving, moving with lesser volume, but we haven't made a new high. And then we get this pickup, boom, right here, right at lower day. If I bought multiple contracts, let's say I bought 4 contracts. If I bought 4 contracts right here, risk to reward ratio almost 7-1. If I bought 4 contracts, I would sell 2 and keep 2 floating. Why? Because I already made the money back on my investment that I initially put in and some. So now I'm playing with house money. The stress is gone. So we got that. In theory, let's say hypothetical, Keith sold 2 contracts. I didn't say this before, I'm going to say this now. I'm going to move my stop loss from here down to here. If price comes above and closes above this area, that's when we get out. If it starts to make a new high, that's when we get out because price could be reversing. Moving stop loss is how you protect your wins. It's how you stay green on the day. Price didn't make a new high. Got more coming down. We made a new low. Theoretically, what I should have did, if I'm still in this trade, hypothetically, move my stop loss down here now. If price comes above and closes above this and creates a new high, I'm out of here. And I'll extend it here. Again, these are our areas of support and resistance. We broke through this. We'll see if price gets a continuation. Crazy, crazy. Listen, I'd sell my last two. If we get down here, sell my last two. But this is the 15-minute open range breakout working perfectly. We get a break, we get a retest, we get a reject, we follow the trend down, we do not make a new high, we keep our stop loss moving to protect our gains, sell and trim along the way, and take that to whatever area you want to take it to. I don't remember how the rest of the day played. Yeah, the rest of the day played out crazy, had a big drop. The thing is, you can't be greedy. You get what you come for, and then you get out. If you stay in a market too long, you're gonna end up being red. So that is my general explanation of how the 15-minute open range breakout works, how I use it, how I apply it to my trading. Again, there's no wrong trading strategy. You got to find what works for you and dedicate yourself to it and perfect it and make it work for you. Like, you got to own it. You can't do it the same way somebody else do it. You got to learn the concept for yourself, apply the concept, and rep it over and over and over and over again. Back test over and over again. That's the only way you get better at it. There's more details, and I will get into like the finer points of the 15-minute open range breakout at a later date. I'm still figuring out like this YouTube stuff for like screen record, and I want to have it so that like my face is up here or down here, and like the whole screen is the screen record. I ain't get to that part of this whole content creating journey yet. So once I do that, I'll be able to go more in depth. But again, I'm making this video because I've received questions about where to apply the 15-minute open range breakout and how to use it. So again, general overview of the 15-minute open range breakout: SPY, QQQ, uh, EQ, which that's NQ, which is the QQQ futures, ES, which is the S&P 500 futures, and SPX. Generally, this works. So if you trade in futures, use the 15-minute open range breakout when the New York session starts. The New York session starts at 9:30 a.m. Eastern time. As far as before, I don't know because I primarily trade options. So from 9:30 to 9:45, that's when that 15-minute opening range sets up. There are there are ways to use it. There are things that have to happen to, I would say, optimize its usage. I'll get into that in a later video. But for now, again, that is my general video of how I use the 15-minute open range breakout and my trading. Thanks. I appreciate you watching this video. Like, subscribe, hit the notification button. And until next time, if you got any questions, write the questions in the comments. I will do my best to get back to each and every one of you. Thanks. Thanks for being here.